Hello, this is Bob Joyner, and this is the recording and a review of the SPY for Thursday, July the 11th, 2024. Big move down, obviously, in today's market, whereas yesterday we had a big move up. So let's go ahead and look at the charts. And what I want to focus on today, I drilled down to two of my favorite, it's one favorite strategy, but two nice little entries today. And I'll show you what same day options they worked out on those two trade setups. All right, so let's go ahead and go to the charts. Looking at a 4-panel chart here, again, a 25-minute, 1-minute, 5-minute, 1-minute chart. And the thing I want to point out first off, in case you were not trading today or this morning, at 8:30 we had this morning's CPI report and also unemployment rate, and you can see what the market's initial reaction was to that report. We had this big zoom up, right? And we went all the way to the R1, establishing a new high for the market. But then, and you can see CCA at that point was extremely overbought, 0.35. If you've seen some of the videos previously, you know that that's a number that we don't ever see. Okay, so that's a warning in itself if you're using my charts, if you see something that far. And then if you see an obvious area of possible resistance overhead, such as R1 and a new high for the market at that same point, then you can start to think, well, maybe this can't last, which it did not. It not only did it not last, but it did not consolidate and just collapsed shortly after 10 o'clock. So after 10 o'clock, again, just to kind of briefly look at what happened, after about 10 o'clock, which is right in this area here, we fell back to the previous day's close, and then we came back down to this green line, which was an area of support that we mentioned earlier this week if you're following the videos. And then we finally ended up going down to the red line, which is another line I believe from Monday, if I recall. Tested that line at the close. So along the way there were some great trade setups. I just want to point out a couple things. If you watched yesterday's video, talked about the 5-minute and the 26-minute Chiku span from the Ichimoku settings, how they agreed on the bullish run up that we had yesterday, and today they agree on the bearish run down that we had. So 26-minute Heiken-Ashi candles on the far left, and you can see Chiku span as it crosses through the historical price curve right over here around 561 or so. And around 561 you can see also the 5-minute Chiku had already crossed down a little bit, because it's going to be a little bit quicker than 26-minute, of course. Then you have that confirmation as we come all the way back down to that red line of possible support. So let me dig into the two trade setups, and I'll show you those and show you what the numbers were on both of those. Before we get into the two trade setups that I wanted to show you, I just want to point out too, in this move down that we had at 10:53 this morning, the 560 put same day expiration SPY option was cost 125, and as I've got the yellow circle down here at that red line on that third attempt to push down there, I've recorded, it was at $4. So a move from 125 to $4 within a matter of about 2 hours. That is a big move, and that's not even capturing where it actually qualified, which was much higher, as I just mentioned, with both the Chiku spans crossing down. But from that point down to that point, from 125 to $4 in one day, and of course you would multiply that by 100 shares per contract in the same day expiration option, and then of course multiply that times however many contracts that you bought. Okay, so here are the two setups that I want to show you, and both of them occurred in a pretty tight range with each other, but I'm just showing you what the possibilities are once you understand how to read these charts. So up in here, the first one occurred at 10:53. I've got the blue circle here for this first trade I'm going to show you. We were at 125. I have the 5-minute half line up in here. We moved back up a little bit. You can see CCA is just trying to get above the dashed zero line there, but cannot make it, and tumbles back down, and you have this red Heiken-Ashi candles. You have a red momentum on the CCA, and everything just pushing back down here as we stay below the J Kumo, below the 5-minute half line, below the pivot line, and we move back down. So that trade lasted 16 minutes and produced a 65% ROI in 16 minutes. The second time we bounced off of that green area, which was the basis for the exit there, bounced back up and came back up to retest the new 5-minute half line, which was here at that point. So move that 5-minute half line down a little bit. The entry on the 560 put at that point, same day expiration option, was 148, and it went down to 285. That one took 16 minutes and produced a 92% ROI in 16 minutes. Again, back down to the same area. Now we ended up going lower for the day, so these puts made a lot more money. As I mentioned, went all the way down to $4. But this is an example of how you can play in and out of those moves using CCA over here, which is a momentum. Just think of it as a momentum indicator. It's my own personal setting. You won't find anything looking up CCA. But it's my own momentum indicator, and you can see where you peaked out up here at 148 after taking profit down here, peaked back up, and then found a good entry to get back in. And again, what you see is red candles coming back down, price staying below the J Kumo. You see that red momentum curve coming back down and then staying back down below the zero line for a second momentum that really pushed it hard there. So very big returns in a very short amount of time, but I'm just showing you the context up close so you can see these trades. And on a day like today when volatility is very high and the price movement is very big, that you can do really well with these same day options if you understand the things I'm reviewing here in this video. Hope you had a good day of trading, and we'll talk to you tomorrow.